I'm Jacob Reeves. I'm a senior tax manager here in our Newport News office, and today we are going to be going over some individual and estate provisions from the One Big Beautiful Bill.
Hi, welcome. My name is Marie Wimmer. I'm a senior tax manager out of the Roanoke office for Brown Edwards. Now some estate and gift tax changes under OB3. So where we were with TCJA, the estate and gift tax exemption was going to be about $14 million for 2025, but then it was going to go down to about $7.2 million for 2026, which is a significant decrease. So thankfully, under OB3, now that exemption is permanently increased to $15 million starting in 2026, and will be continued, be indexed for inflation going forward. So that takes a lot of the uncertainty out of the estate and gift tax arena.
Yeah, and I think this is an area a lot of times where we never get permanent closure on anything related to estate, so it's kind of nice that we get a little bit more planning runway, that it's really only going to change if a new administration comes in and decides to overhaul it.
Right. Yeah, everything that we say is permanent today is because of OB3.
Yep.
Okay, so now we're going to get into some of the provisions that changed under OB3. This slide is the SALT cap. So SALT stands for state and local income taxes and is part of the itemized deduction. So this was $10,000 under TCJA. So now, starting in 2025, it is increased all the way up to $40,000 and will be indexed through 2029. Now, there are some complications to this. You only get that $40,000 cap until you reach an AGI of about $500,000. And from there, it will start to be reduced and then completely phased out at $600,000. At that point, you'll revert back to your $10,000 cap. Now, when TCJA put this back down at $10,000, what happened was a lot of pass-through entities at that point paid the state taxes at the entity level instead, right? So that they wouldn't be subject to this $10,000 cap. And we were afraid with OB3 that that workaround would be eliminated, but it has not been. So that's the last bullet point there. Pass-through entities are still allowed to pay the entity taxes if they so choose.
Yep. And so I think it's a big deal that this limitation got increased, but they also have been upping the standard deductions. So a lot of people, even though you're starting to hit that 40,000 in taxes, or you're getting 25,000 in taxes, you may still not be itemizing. So you may not even be seeing that benefit from this, since you're just using the standard deduction.
Right. It's going to depend on everyone's individual situation.
Yeah. But they did officially protect in this act those pass-through entity taxes. So I think the past few years we've been monitoring states, and we still have a few straggling holdouts that haven't enacted anything yet, but I think this might give them the encouragement to start looking into it more.
Right, and this increase is only temporary.
Mm-hmm.
So when it reverts back to 10,000 again, those pass-through entities will again want to make that election.
Yeah, absolutely.